This is our Forex blog for February 25th, 2011. And like most days, we really want to find which currencies are strong, which ones are weak, and trade the strong ones against the weak. Coming into today, the dollar was weak in real time, and the daily, weekly, monthly trend was down. You can see, looking at this, the euro was pretty strong. The Australian had some real-time strength. Unfortunately, the weekly and monthly trend on this one was down. Let's take a look at the Swiss. Yeah, the Swiss didn't really have that much strength. So coming into tonight or today, you could have looked for some buys in the euro dollar. So we'll start with that one. Coming into last night, you can see this had broken over the previous day's high, and it really was going up with almost no momentum. And the euro dollar was up, pretty substantially yesterday too. If you drew a fib off of this last wave up, didn't quite hit that fib target, but the fib target was just a few pips above that. So traders, don't typically like to buy breakouts right in front of a major resistance area. That's probably one of the reasons why it failed. Let's look at, and basically our rule is when it's above the hourly, we look for buys. When it breaks down underneath the hourly, we look for sells. The euro dollar was up a lot, even though the longer term trend is up. When a currency breaks underneath the hourly, you might have gone short here, you would have lost. You would have went short again here, you would have made about 25-30 pips. And then, the market didn't even pull back at all. Went sideways here, nice little sideways wedge pattern with volatility getting smaller and smaller. Nice breakdown. And usually when the market makes a lower low on the pullback trade, usually you can get short there. And because the longer term trend is up, I would not try to hold past, one of these fib targets. And when you see the weekly and monthly trend is up and the market's made a 3-wave pullback, the first wave, second one wasn't that much, third one, usually it's very likely to reverse at the lower containment bands, fib targets. I don't really use Elliott wave in my trading, but trends usually stall and have some kind of a reversal after 3 waves, especially if the 3 waves down is against the longer term trend. You can see today the pound became really weak at 430. The yen didn't really have that much strength at that point. It started to have a little bit of strength after that. The daily trend was just on the verge of shifting up. The weekly trend was up. So you could have looked for sells in the pound yen. You can see on this chart here, let's scroll over here, we had a narrow range pattern breakdown and also broke the hourly, the 200-day moving average major support. So I don't think I would have really looked to go short until it broke that 200 here. And then you had this fib level of support here. That's a nice little 40 pip move. A lot of people in our live trading room shorted this next pullback and made about 30 pips on that pullback right to the previous day's low right here. Great trade. And you can see the pound weak, real-time strength in the yen strong. CAD also showing pretty decent strength today. Most of us don't trade the pound CAD, but that would have been a decent one to look for opportunities in. Pound CAD's very likely to go down, and as you can see here, it does. Breaks the previous day's low with a lot of momentum. And if you shorted that breakdown right here or at the hourly, a lot of times when the trend's down, the first time and usually second time it touches the hourly, it's a great place to sell. If you're wrong, you lose 5 to 15 pips, and if you're right, you usually get into these nice trends like this. This was a pretty decent weak move down. You can see it almost hit our extreme weakness level, and on the way up it had almost no strength at all. This is a no-brainer sell right here once the market stalled and started to go back down, and it just fell right to the lower containment band, and you can see a trend reversal signal right here. Pretty decent place to get out. You might have also even sold this next pullback here. It did go up with pretty decent strength, so you'd be really careful here. But once it started to fall like a rock, just hang with it. And again, when currencies are underneath the lower containment band, draw a fib off the last wave, even if it's a tiny one like this. And the first or second fib target, usually the second if it's really weak, is your maximum profit. So you sold this up here at 5,800, you're out at 35, you made 65 pips. And you might have also gone short here again on this pullback up to the previous week's low, major resistance, and you'd still be in that trade right now. It hasn't broke down yet, but being a Friday, you probably want to exit this. If it doesn't break down, take a small loss or break even in that. Now the Swiss has an extremely strong weekly and monthly trend, but at 4 o'clock it was one of the weakest. You could have traded this against the Australian, which became really strong. At 4 o'clock, the dollar was strong. The dollar Swiss might have given you 1 or 2 trades on the long side at 4 o'clock or afterwards. Here's 4 o'clock right here. Very narrow range pattern, and it breaks out above, the hourly right here. And you might have gone long right here, had a 5 or 6 pip loss, got long again, break even. The third time up, just took off, and it went up about 40 pips straight up with extreme strength. Anytime you have plus 20 or even close to it strength, usually you want to buy the pullback, and usually the trend will try to continue up. In this case, it double topped here with clear divergence, and because the longer term trend is down, aggressive traders probably would have got out of that buy and went short right here, and then it pulled back without that much weakness, so you take a quick little 10 or 15 pip scalp. It's kind of going back up to its highs. If the weekly and monthly trend was up, you might want to buy the breakout of the high. But again, in this case, the weekly and monthly trend's down. This broke out, and we had a trend reversal triangle with no momentum to the upside. The longer term trend's down. The safe bet was, look for a sell right here and write it down 20 pips. I wouldn't have bought that pullback because it appears that it's topping out. Draw your fib on this last wave and just keep selling the fib targets up here, because this last wave up did have more momentum than the past right here, but you can see as it was starting to go up a little bit later, that strength was disappearing. So it's pretty safe, low risk counter trend trade up here, because you're actually trading with the longer term trend, which is down. The short term trend is up, the intraday trend is up. However, it's gone to our upper containment band, which is the maximum volatility over the last 20 days, plotted off of the hourly moving average. So it moves as the price moves up, this moves up with it. Usually price doesn't stay outside those bands. As you can see here, it hits the lower band and reverses, hits the lower band and reverses. Same thing. You wouldn't necessarily want to buy the lows in the currency that's this weak, but selling the highs is a totally different story, and you're trading with a longer term trend. You're trading with the institutions that have been selling the dollar Swiss for years, or for over a year.